Hi, welcome to this video data, which is all about Forex price action trading for beginners. Now, in terms of price action trading, is the most popular way of trading the markets chosen by beginners or retail traders. They try Forex price action trading strategies and most lose their money very, very quickly. And the reason they do is they have not thought about the relationship between cause and effect on a chart and how price action really moves. So I'm going to go through cause and effect in a moment. Now, the reason so many traders lose with price action trading strategy is because they are fooled by two cognitive biases we all have in our brains. One is called the Texas sharpshooter fallacy, and the other one is called the clustering illusion. Once you understand these cognitive biases, you will understand why so many traders lose with price action trading. Now, what I'm going to do is explain the biases in general terms, first of all, with a quick video clip, and then we are going to relate them to Forex price action and how to avoid the fatal mistake of misunderstanding cause and effect on a price chart. Right, here is the quick intro clip. It's only about a minute or so long. Then we'll come back and relate it to Forex trading.
Abraham Lincoln and John F. Kennedy were both assassinated by a man with 3 names, 15 letters long. John Wilkes Booth and Lee Harvey Oswald. Neither killer would make it to the trial. Both men were shot on a Friday, sitting next to their wives. Lincoln in a Ford Theater, Kennedy in a Lincoln made by Ford. What are the odds? Why do deaths always seem to come in threes? How did the basketball make it in there from all the way across the court? Why did the tornado spare the church? Some things in life seem too amazing to be coincidence, too odd to be random, too similar to be chance. When you desire meaning, when you want things to line up, you see patterns everywhere. Order makes it easier to be a person, to navigate this sloppy world. You're born looking for clusters where chance events have built up like sand into dunes. Picking out clusters of coincidence is a predictable malfunction of a normal human mind.
All right, we'll come back after that short clip. We'll go and look at a price chart in a moment. But just very quickly, in terms of that clip, I just want to stress a couple of points. Now, we did have a guy shooting randomly at a barn door, but he shoots so many times, eventually the bullet holes will cluster, or a number of bullet holes will cluster. You can go over in hindsight, draw a bullseye around them, and it makes him look like a sharpshooter. But the bullseye is an illusion, isn't it? The cluster of bullet holes actually formed randomly. You'll keep this in mind when looking at chart formations. Also, in that clip, there was the emphasis on the similarities between John F. Kennedy and Abraham Lincoln. Weren't they amazing? Not really. Just think of the differences. There are far more differences than similarities. One was a Methodist, one was a Baptist. They were different heights. One wore glasses, one didn't. They had different numbers of kids. You can keep going on and on. Now, in terms of Forex traders, they focus on the times the chart formation did work, but not on how many times it didn't work. It's a thing we like to find order or a meaning. It's a bit like, why did the tornado miss the church? How many times did the tornado hit the church? We do want to find order. Okay, we do like patterns, and you've got to work out what is meaningful and what isn't. Okay, and this is a real problem for Forex price action traders. Now, I want to relate this now to Forex trading in a little bit more detail. Go to a sample price chart, and then we're going to go through how to make your Forex price action trading effective and profitable. Right, let's take a look at the chart.
Sample chart. I'm just going to illustrate cause and effect, and I just want to go through these points in a moment. But I just want to go through a particular favourite trade setup that we like to do, which is to buy a break of resistance when it lines up with the 20-day moving average, the green line. Okay, once we've broken it, we then look for the 20-day moving average to provide support. We did this in our recent weekly forecast. We do it all the time. You see it finds support, comes back beneath, and just around the 20-day moving average, but it's gone a long way to the upside. Okay, we also do sells when a level of support breaks and use the 20-day moving average as resistance. We do it all the time. You'll see us do it in real time in our weekly Forex forecasts. Highly effective for us, and over the longer term works really well. But if you were to try just buying and selling 20-day moving average breaks, how often would it work? It would work a lot less times than it doesn't work, because you've got to be able to filter the trade setup. You've got to know the cause, okay, behind the move. Okay, now I'll return to that in a moment, but in terms of price action educators, have you noticed that if you look around online, you never ever see them give trades in real time, entry, stop and target in advance? They always do it in hindsight, going backwards on a chart, or they give vague advice like buy it if it goes up and sell it if it goes down. The reason is they know that price action trading appeals to traders. Just look at a chart and make money, but they know they can't do it, okay, because the price action is the effect, it's not the cause. Okay, the cause is not within the price action. Okay, and in terms of this, once you understand that, they just focus on the effect, okay, and not the cause. So it's only going to work in hindsight. All charts look easy, don't they? In hindsight, you've got a trend down there, trend up there, bit of consolidation. Every chart looks the same. Try and trade it in real time, and it becomes much more difficult, because the price action on it on its own does not mean anything. Okay, it's not operating in isolation. There's a cause that basically makes the chart move. You need to know that cause. If you don't know that cause, then you will not make money. The cause is obviously trader sentiment, which reflects in price action. So you've got to know what the cause is. If you don't know what the cause is, then you're trading kind of blindly without the odds on your side. And you can actually do a study in terms of price action trading, where you can take any chart formation you want. You could take, the one I've just given you here. You could take, I don't know, a Gartley pattern. You could take a head and shoulders, top, bottom, triangle, whatever you want. Test it over the longer term, and you'll find that no chart formation on its own will give results that are better than random. And this has been proved in numerous studies, because you need to know the trader sentiment behind the chart, so you can filter out the formation against the sentiment. So for example, here when we come up, I know the fundamentals are bullish for the USD, and I know that traders are probably going to buy. They will buy. You'll obviously get retracements from overbought on the way up. They'll normally be supported by a 20-day moving average in a strong trend. It's just standard deviation to a mean price, which is used in various areas of life. It's a concept that works. The chart formation will only work if you know the cause of the price action. Okay, it's not a question of just following price action. This is easy once the chart is unfolded. It's not easy when the move first starts, of course. Okay, can you make money with any price action trade setups longer term? I do not think so. I think if you went back 30 years ago, you could. I've explained this in other videos, because there was no internet. and trader sentiment was not so important and noise levels were not so high. But in today's markets now, in terms of if you were to look at professional traders, do they use price action trading? No top professional trader in the world does. Do you think Ray Dalio actually trades with price action? He's the world's most successful hedge fund manager. Of course he doesn't. Do you think big banks and hedge funds do? No, they don't. They all look at sentiment and fundamentals. They won't use technicals, but the technicals, you can only get the odds on your side if you do some study of sentiment or fundamentals behind the price. So why don't more traders do it? If you do your research on price action trading, you'll see it will not get the odds on your side. I think traders want an easy way of making money. It's very compelling to just think, oh, I can look at a chart and make money. Okay. Brokers promote the myth as well. Educators make a fortune from it. And I've always found it amazing that traders come in the markets, they buy strategies and courses from price action traders who do not demonstrate that they can actually make money with their own techniques. It's like going, to learn to drive and not knowing that your instructor can already drive. It's very similar, okay? I think, you've got to be realistic in terms of what it takes to achieve Forex trading success. Actually doing a simple study of sentiment and the fundamentals, it's not hard. Okay, we've got plenty of videos on how to do it. Then your technical analysis can be very, very simple. You've got a directional bias, which will basically put the odds on your side because you know what the cause is, and then you can make a sort of postulation of what the likely effect is going to be from the cause. If you just study price action, effect and cause are not related. Okay, so be very wary of price action trading, in my view. Right, that is the video for today. Thank you very much for watching me as usual. Take care. Have a good day.